What's going on, guys? This is Christian from Stock Hours, and today's video, what I'm going to be talking about is what a lot of people struggle in a lot. It's adjusting to changing market conditions. So you might be on a hot streak. You might have like a month-long hot streak. Every week is green. You barely have any red days. It's because you specialize in that specific type of market condition. For example, let's say the market is running, all the stocks are just continuing to move in your favor. Not many pullbacks or anything like that. You might be able to capitalize on that. That might be your best market where you perform the best. But now we're starting to consolidate, so you have to adjust how you look at the market and how you look at your trades, even how you plan for your trades. So that's basically what I'm going to be talking about today. So the first tip I have for this topic overall is just to know what type of trader you are. So for me personally, I specialize in momentum breakout scalps. I like to be in and out very quick. I like to catch a quick momentum move, a big move, heavy volume, things like that. So I know that that's my edge in the market. So knowing that, I know on the flip side what I struggle with a little bit. That's consolidating markets where we don't have much follow through after the breakout, just for example. So knowing this, even going into the day or going into the week, once I start to see that the market conditions are changing, I'm going to start adjusting my plan. I'm going to start adjusting how I'm going to look at the trade overall. How much room it has, where I might want to take an entry, or even if I want to take the trade at all. I might want to just avoid it entirely. So the first tip is just knowing what type of trader you are, and then also knowing what type of market you strive most in. That just goes based off of what type of trader you are. So that's for the first tip. Now the second tip, something that helped me a lot in kind of adjusting my strategy a little bit based off of the market conditions, is lowering my position size. So this allows me to focus on the execution. So I'm not, solely focused on how much I'm up or down or whatever. This way, when the market conditions are changing, I can de-risk my position size since it's something I have to adjust to a little bit. I have to get better at trading in this specific type of market. So de-risking your position size when you're unsure about the market movements overall is going to help you execute a little bit better. So another thing, just another way of looking at it. So as a trader, what you're trying to do is capitalize on probability of success when things are unsure. Don't allocate the same risk as when you have an edge. So basically, if you know that your best market is a breakout market, for example, when the market is consolidating, your edge is not 100% there. The market's consolidating, if you're looking at a breakout, you might get a little quick break. You might have to just take the scalp and then leave. So if you know you're not in your ideal type of market, then don't put your full risk in that, because the reward is not the same if your win rate is a little bit lower, for example. The next tip I have for adjusting to the changing market or different market conditions is just journaling. Journaling really helps with everything in trading, whether it's mentality, execution, whatever it is, especially if it's a changing market. The reason why journaling is so important is because you can see the trends over time. So you can start to see, okay, these stocks are not having the same breakouts that they did, a month ago, 2 months ago. So I'm going to have to adjust how I trade overall to best fit the current market conditions. So with journaling, it's a very easy way to set rules for yourself. So something for me that I have to adjust over time was setting different rules. So for example, one of the rules I had to set for myself, no trading past 11. Me personally, if I like trading with heavy volume, quick breakouts, that's going to be closer to market open, the first hour of the market typically. So I might have to set a rule for myself, no trading past 11. Now there might be certain times where I can, deviate a little bit away from that. That's only when the market is really working in my favor, when the market's really breaking out. Now, if I know it's a consolidation market, we're not really doing too much across the market overall, I'm going to have to stick to that rule of no trading past 11. Because if I'm trying to trade the breakout, then I'm not going to get that breakout in a consolidation market past 11 if there's no volume in the stock overall. So that's just one example of a rule that you'd have to set for yourself. Another one for me is just being very tight on your trade selection. So once the market starts to get a little bit difficult, you're going to have to cut down on the iffy trades. Stick to only the higher grade setups. Now, it might mean you might not take a trade, a specific day. So let's say it's Tuesday. The best setup is like, a B minus, whatever. If you're struggling overall in the current market and the best setup you have for the day is like a, low B, high C, you might want to skip it entirely. Come back tomorrow when you have a much better chance of getting a higher grade setup to where the risk is worth it. So that's pretty much everything I have for adjusting to the changing market conditions. So let me know how you guys do when the market changes and if you guys still maintain your profitability. So let me know in the comments down below how you guys adjust to changing market conditions. But I hope you guys like the video. I'll see you soon. Peace.